Welcome to another Coffee with Samso, where we speak to mineral explorers and CEOs about their journey, their stories, and sharing what's happening with the company. Today we're at Mill Point Bookshop Cafe. A big thank you for letting us use their setting. I've got Blackstone Minerals here, Scott Williamson. Welcome back. Scott, in the market you've put out a scoping study, I guess. Can you just give us a brief of what's the key highlights, key points about the study?
Yeah, no worries. Thanks, Noel. Finally, great to get those numbers out there. So it's a long time coming. We've spent about 6 to 12 months on this scoping study. The high-level numbers. So today's nickel price, we're looking around about $600 million NPV in Australian dollar terms. Very strong IRR, so a good return on capital. 45% IRRs, so yeah, we're very happy with those numbers. The capital is around $315 million, so US. So the capital is about half the NPV at consensus prices. So yeah, so it's a great result. It's 8.5 year mine life as well, so we will extend that. We have the ability to reduce that upfront capex by using and exploring some of these other massive sulfide opportunities and using the existing infrastructure. So this is really a base case first sort of pass. We think we can improve on it significantly for the pre-feasibility study, which we've already started. So yeah, it's great to get some numbers around it and finally show the market this whole downstream and what that means as well. So we're looking at a precursor, which is the first stage of the cathode for the lithium-ion battery. So yeah, it's the first time that the industry's sort of headed down this lithium-ion battery path. So it's good just to show the market where we're up to with that.
In terms of the capex, just give us an idea. I mean, a lot of guys don't really quite understand the significance or insignificance of a number. Is 300 million big for a project like yours?
No, well, particularly because we're looking at the downstream as well. So about half of that number is in the upstream mine, so the concentrator. We're looking at a 4 million tonne per annum and a 6 million tonne per annum scenario. Then the other half of that capex, so around 150 million, is in the downstream. So we've got two projects within that number. So that number is still significantly lower than our nickel laterite peers, which they're around $1 billion to build. So it's a third of one of those, but we've also got the two projects. So we're very happy that that's achievable, particularly because we've got our partner EcoPro that's also coming in to help fund the downstream portion of that. So that 150 million that we talk about, the downstream, we're looking at a partnership with EcoPro whereby they bring a significant amount of that capital as well.
I mean, 2.5 years of payback, that's pretty good in every man's language, I think. Is that something is that consistent with your thinking? Yeah,
we're very happy with that payback period, and that's over that whole project as well. So that's at consensus nickel prices. So we've used the, I suppose, broker consensus price, which is $8 per pound. We're seeing strong nickel price in the market today. We believe that we'll see that price very soon. But when you build a study, you're always looking to when we bring this into production, where do we see the nickel price? And we think $8 a pound is very conservative because this is a 2023 story. So we've still got 3 years to see that uplift in the nickel price, and it looks like it's happening sooner rather than later.
Okay. When we started talking, I mean, going back almost 12 months now, the story was not disseminated, right? It was more sort of massive sulfide, things like that. Going forward, is that going to be a positive, or is that going to create more chaos, a spanner in the works for you in terms of what the project production wise?
So we can always blend the two types of ore bodies, so disseminated and massive. We may even use the small existing concentrator just for massive, and then we use the new one, which is that 4 or 6 million tonne per annum for disseminated. So we could actually split them in different concentrators, or we can blend them through as well. So we can batch process, so there's no issues there from a metallurgical perspective. I think there's been some confusion in the market. The reason we drilled out that disseminated ore body, that was the largest ore body we could see, and we needed that to justify building the downstream processing facility. So that was the first ore body that we went to, but now we're drilling Ban Chang and Ta Kung, and so we'll drill these other massive sulfides, and they are obviously exciting for the retail investors, but we're really focused on throwing some numbers around it because the institutional investors really need those sort of financial numbers to invest. So we now have shown that, and we think that that's what the institutional investor will see and hopefully buy it up.
Yeah, I mean, when you guys talking about the scoping study and things like that, I took that upon the fact that you needed something, a starting line for people to sort of say, well, you know, you kept talking about big, okay, we can do this, but now it's like, okay, numbers, 2.5 years, capex, and this can all be refined, I'm assuming, going down the road. And obviously with like we talked about the blending and things like that, that could sort of change your numbers a bit. I mean, the grade that you got is almost 0.5, I think. Is that right? 0.5? Yeah. And but the volume is huge, right? You're almost sitting with the lateritic guys, you know, when you compare, right? What are your peers saying?
So yeah, what we wanted to show is an ore body of significant scale, and that's what obviously allowed us to bring in partners like EcoPro. We couldn't go and drill out these small ore bodies and attract big partners like EcoPro. So we do have a first ore body which is of significant scale, but it is, as you're saying, it is just the starting point, and it's the base case. So what we wanted to show, and hopefully the market will digest this, is that even the first ore body and the base case is very strong on an economic sort of scenario. So from a global scale, we're very similar, I suppose, grade to the likes of Mount Keith, and we've got the scale of a lot of these laterite mines. So the laterite's needing $1 billion versus our 300 million. We're in a very strong position, also from an operating cost perspective as well. So we believe that we can be in production and making money at much lower nickel prices than our laterite peers, and we don't need the $1 billion capex as well. So we're really in front of the pack as far as nickel sulfide. There's just not many of these big ore bodies around, and with the medium, it's really a medium grade compared to, there's a lot of lower grade large ore bodies around, but around that 0.5% where Mount Keith sits, and we do as well, it's a medium grade, and it's very economic, particularly when you look at the downstream opportunity.
I remember I was looking at a nickel laterite project in the Philippines, and you know, it was talking billions market capex, right? $1 billion, and yours is, you know, a third of that on that scale. You touch on the point. It is the fact that the market, obviously, you know, looking at the share price, the market has sort of like jittered a bit. But I don't think that's a bad thing. I think that's the fact that the market, market's always looking at the blue sky, and you know, they're 10 miles ahead when they should really be only 2 meters ahead. But what's the market reaction? What's your feedback, I should say? What's your feedback from the market?
Yeah, so there's a couple of things. I think the capex number was probably a little bit higher than we'd first hoped. We actually started to look at using the existing infrastructure, but the ore body was just too big. So we worked out that to use the existing infrastructure, we'd only save about $20-30 million. So it's not, we're better off leaving that existing infrastructure for the massive sulfide. So that's the reason why the capex is a little bit higher. The other thing is we've changed away from an exploration company now. We're in a development phase. So there's a lot of investors that were there for the next drill hit, and I suppose we're still going to continue drilling 6 drill rigs. We'll turn that into 8 and maybe 10, but we're not going to I suppose announce every time we hit massive sulfide. We're hitting massive sulfide every week, but we've sort of moved away from that phase of announcing every visual, and so there's probably parts of the market that are going, well, you're going into that boring phase of development. What I can say is that this isn't the boring phase, because we've still got active drill rigs drilling out all these massive sulfide opportunities. So that excitement is still happening and will continue. it is hard to understand markets at the moment. It's a very different market. There's a lot of unsophisticated investors just chasing the next hot thing. So maybe it's the fact that we're not sort of, I suppose, talking about massive sulfides on a weekly basis. Maybe there's a bit of that, but I can say that we are hitting massive sulfides on a weekly basis. Because we're not announcing every time we hit massive sulfide doesn't mean we're not. So yeah, I think it's that transition between explorer and developer, but we will show that we're still a very much an explorer. So we're driven by discovery as well.
Yeah, I mean the upside for your project is it's hard to contemplate because you have so many targets, and the size of your present project is also already big in itself. When you look at comparing it to your peers, I think your disseminated sulfide range, you're almost at the top in terms of grade. Sure, you may not be huge in terms of volume, but your grade's high. But then compared to volume of your laterite guys, you're actually swimming with the laterite guys and not the massive sulfide guys. So there's always that balance, I guess, in that, so to speak. Can a lot of guys will hear the scoping study, and then we talk about our industry. We'll talk about feasibility, bankable. Can you just give us a layman's description what that scoping study actually means and what it means for a company like yourself? How you position yourself with that?
Yeah.
What's scoping study?
Yeah. So the whole idea of the scoping study is just to, I suppose, an initial look at what the potential economics of a particular ore body are, and so what we already, these numbers that we're showing in the market now, we saw that from day one, and that's why we went and drilled the ore body out. But we needed to show the market what we've been doing, and so it's all about showing initial economics, doing some initial metallurgical test work, and what I can say is that ours is a lot higher level scoping study than what a lot of people do. A lot of people don't go into much detail in a scoping study. Our feedback from our consultants is this is one of the most detailed scoping studies they've been involved in. So we've taken it to almost a pre-feasibility study level, but it's more about just initial economics. Does this thing work? Does it fly? And that's the only thing. That's all people need to look at in these numbers is, does it work, and what prices does it work at? And what I can say is it works at today's prices, and it works very well. So then the next stage is to refine those numbers and make them tighter and do more work and more test work, more metallurgical test work, more mine designs and just refining the numbers. So the numbers from here will just be tighter, and so it's initial study and initial economics. So it's a first pass look. Does this mine fly? And what we can say is it does.
And so obviously the how should I put it? All your numbers, your 2.5 years payback and your NPV and all that kind of stuff. From a layman's point of view, how are we talking plus and minus? I know it's a sort of a question very hard for you to answer. When they look at those numbers, do they just look at it and say, okay, this is a project, as you say, it's going to fly, whether you're going to make 10% more, 10% less. Is that kind of margin we're talking about?
Yeah, so the ASX, I suppose, rules around scoping studies that you need to I suppose, use a big factor of safety. So the plus or minus 40% is what we've used. But what I can say is that we're confident that it's much tighter than that. So although we've put plus or minus 40, it's probably a lot tighter than that, and we're confident that it's not going to swing 40% either way. So what you can sort of say is that it's probably more like 20 or 25 or 30, but the ASX prefers that we use big ranges, and because it's a scoping study, we have to show that there is flex on that. So and that's the other reason why we've used the ranges in those costs and everything's a range, and that's because the ASX prefers that we show that there is some I suppose room to move it both positive and negative. So but Yeah, we're confident that it's much tighter than the plus or minus 40, which we had to put in the study.
For those guys who take your cash flow or your gross revenue based on your tonnage and your resource, and they go, oh well, because your potential, you guys are finding more is quite high. It's not guaranteed, but it's pretty quite high. So if they said, oh, if they had twice the amount, would that revenue follow in tandem in terms of that margin, or would it be sort of higher because of economies of scale kind of stuff?
Yeah, definitely, and a lot of that obviously comes down to grade versus tons, and so if we were to get the same tons and same grade, but then an increased throughput, so we can move to the 6 million tonne per annum, so then we get the economies of scale. So you could actually get better numbers by finding more ore, because your base is there. So you paid for your capital, you've paid for all your overheads, and then so any incremental increase in grade or tons could actually be better than just, so a double of tons could potentially be better than just double on the revenue line. Yeah.
In terms of where you are, I mean, from my point of view, I mean, you guys are a bit more sort of intimate with the project, because to me, you're where the market is. You're not sort of in Australia and then having to the market sort of in that Southeast Asia, Does that play a big part in terms of your economics, like the fact that you don't have to deliver it so far? You got a partner who's already in with this commodity, this product.
Yeah, so one of the biggest benefits is the hydro power. So we've got the renewable power in Son La, so largest hydro power plant in Southeast Asia. So that's one of our key benefits of the location. And then the very competitive labour costs as well. So some of the best labour costs we've seen. And this is skilled labour as well. So these geologists that we've got, and this will go through to metallurgy, mining, all the way through the mining cycle, we've got very competent technical people on the ground, and as good as we get in Australia, but a much more competitive price. So the key benefits for us, obviously the location helps for transporting, but ideally this nickel never leaves the country and it goes into electric vehicle in Vietnam. So we're more likely to see the benefit because there's the lithium-ion battery plant down the road. Just this week, Samsung have also said they're looking to build lithium-ion batteries. So we've got LG committed, Samsung's committed. We've got local conglomerate called VinFast looking to build electric vehicles. It would not surprise me if bigger OEMs end up in Vietnam because it's a great place to manufacture. So the benefits are there's this hub of entrepreneurship really that's happening in our region. So it's happened for electronics and it's going to happen for lithium-ion batteries. So that's a real key, I suppose, for us as well, is we might not have to ship anything. It could actually end up in an electric vehicle in northern Vietnam. So
the other thing that comes to my mind is going forward. I mean, there's a lot of talk now about how, I mean, going back before, people want to invest in something that's renewable, people want to invest if it's not gambling. Going forward, is there going to be a shift where the majority of the funds will look at investing in green, renewable energy products, and could that then, if that was the case, would that then put Blackstone in a unique position where everybody wants to, have to be in certain degree, invest in that sector?
Yeah, we're already seeing that, and the likes of Fidelity, who we bought in the last raise, they are mandated to ensure that their investments are sustainable and ethical. So, being one of the biggest institutional investors in the world, they have very strong ESG compliance. So, we'll see this become more and more of an important distinguishing factor for our investors. Is it needs to be ESG compliant, and the problem with nickel is all of the nickel mines in the world are already in established infrastructure that's not on renewable power. So they're burning fossil fuels, they're using pyrometallurgical techniques, we're looking at renewable power and hydrometallurgical techniques, which are much lower energy intense and a much lower emissions as well. So we're confident that we will attract those particular types of investors, but more importantly, we will attract the OEMs that are focused on a clean and green lithium-ion battery for the electric vehicle. So eventually they're going to look at every part of that lithium-ion battery and how much carbon has gone into the production of that. So we're very confident that that puts us at the front of the pack with respect to the likes of Tesla and VW and these large manufacturers will be very focused on where did that nickel come from, was renewable power used, which technique, was it pyrometallurgy or hydrometallurgy, all these things, how much electric equipment have they used. So if we go underground, can we use underground electric equipment? If we go open pit, can we use electric equipment? We will be looking to minimise and almost reduce completely all the carbon footprint.
I mean, it becomes like an auditing process, you know, from the guy who sells the electric cars or electric bikes or something, and then it's like an energy saving star thing,
Yeah.
right? And I guess, you know, with you guys, what interests me at the start is how big you guys can get, and you can see you're in that process. I guess it's just a matter of time, right? Before you guys start producing. In going forward, right? I mean, what is the potential timeline or process of how things you see as slotting in? I understand it's not fixed, but you know, how do you see 12 months, 24 months?
So what I can say is that we're driven a lot by our partner. So EcoPro need our downstream nickel products in 2023. And so that's why we're aggressively moving through these studies. So the pre-feasibility study we want in late Q1, straight into a bankable study. So late 2021 we want a bankable study, and then we're looking to rebuild and restart the mine, build the downstream process facility in 2022, and then deliver downstream nickel products in 2023. So it's a lot of that is obviously permit dependent. So we've started that permitting process, and we've started those, I suppose, building on those existing relationships with the local provincial government and the central government. So yeah, there's a lot of work to be done, but it's what I think the market needs to realise is that EcoPro will do whatever it takes to help us to deliver the products that they need in 2023. So we've got the big partner that's going to take us through this, and they will throw as many resources from a financial but a technical perspective as well. So we're working with their chemical engineers, and we're aggressively going to pull this back into production, and it's particularly for our partner EcoPro.
I mean, all the things that, you know, we talked about obviously is, you know, it's a good thing. It's, you know, potential of growth. So what could potentially happen that will create an issue for you guys? What will create that spanner throw that spanner?
Yeah, permitting's a key risk wherever you operate. So even in the Western world, permitting there can be things that come up in that permitting process. So we've got a lot of environmental work to be done. We need to ensure that we're looking after the local community. So we're lucky that all of that work has been done previously. So we have some great relationships with the local community. We have existing environmental testing ongoing from the previous operation. So that environmental testing has been ongoing for 10 or 20 years. So we're not coming in. It's not a greenfield site. So, but yeah, permitting, funding obviously, but with having EcoPro there as a funding partner, we think that's becoming less of a risk for us. So. Yeah, the nickel price, obviously, we've shown that we need a nickel price around these levels. So if the nickel price did fall away, that would delay things. But yeah, I think it's the same issues you have with any mining project. So it comes down to commodity price, funding, permitting, technical risk, obviously, but we've got EcoPro helping with the technicals as well. So we've got EcoPro have already built these facilities in South Korea. So that's minimised by EcoPro as well. So they bring not just the technical and the funding, but they bring that ability to work with us and deliver the products that they're already producing.
One of the things that was a sort of a alarm bell for me when we talked about this project, even when you first started 12 months ago, was obviously sovereign risk, right? Vietnam, everything. And you obviously now that you've had so much time, you've dealt with them, everything. How would you answer that question if I asked you that 12 months ago?
Yeah, so sovereign risk. Well, and that's the reason why when we did this deal, we did it as an option. So it took us 12 months to exercise the option. The reason wasn't the technical. We were very happy that we had a mine. It was we wanted to understand the jurisdiction and the sovereign risk around Vietnam. Within that first 12 months, we worked out very quickly that this is a great place to operate, particularly if you have a Korean partner. So Samsung and LG are throwing billions of dollars into this region. And so it's almost like when you go into the government and you say, oh, we're working with the Koreans, they go, oh, you're with the Koreans, straight through. It's one of the best intercontinental sort of relationships I've ever seen. So this very strong relationship between Korea and Vietnam, and obviously that Australia connection as well. So they know that Australian mining companies, we do it to a world-class standard. So if it was anyone else, it might be a little bit more difficult because the previous owners were Australian and Canadian, they know that we're going to do the right thing by their local people. We're going to pay our taxes. We're going to look after the environment, and that's why we believe that the sovereign risk is minimised because of that strong relationship with Korea, but the strong understanding from the Vietnamese government that we are some of the best mining people in the world.
And from a technical point of view, in terms not the processing side, but more the geological side, I'm assuming there's not much issue because you guys haven't really given sort of any hint of problems. Is that a fair assumption?
Yeah, so geologically, we believe this is a world-class nickel sulfide district, so it will just continue to deliver. So there's no issues there. It's a bit like the Bellevue gold story. Like when you're in good geology, it surprises to the upside and it just keeps delivering. So I think people can be, I suppose, very confident and comfortable about the geology. So we will find a significant amount of nickel. That's just a given. Obviously, now we've got to show the market that we can deliver a nickel mine, and so I'm teaming up with good people that have done that, and so we're building out the team. We're going to build a mine, and that's when we close the gap on this NPV. So at the moment, we're trading at a significant discount to NPV. As I de-risk this mine, move it back into production, that gap has to close, and we've seen this all before. This is the typical development cycle. As soon as you put out a scoping study, you get the people that exit because they wanted the exploration. We will continue to deliver exploration, but we will also de-risk the mine and move it into production. So there's a double sort of benefit there from exploration, but that development and closing on that NPV.
I mean, Scott, we've had many discussions about this project. I think the scoping study is a good thing. You had to put a starting line somewhere. Yep. Eventually, you need to sort of say, okay, you said it's so good, show us something, And I think that the scoping study to me was that whether and once, like you said, plus or minus 40 or plus or minus 20%, that's in the future to come, I guess. And I think if you're in a good story or good geology, as you say, it's going to surprise us on the upside. And I think that's going to be the case. The biggest issue, obviously, like you said, is I think nickel price is probably the one. But nickel's supposed to be hitting the roof for about 3 years, 4 years now, and maybe time's not far off, I guess, in some ways. Touching on that, has that nickel price been doing the right things in your eyes going forward, or is it still up and down everywhere?
Yeah, it's probably one of the more volatile base metals. It's such a tight market. It moves aggressively in both ways. I think I do like to focus on copper as a bit of a leading indicator. So copper bounced really hard out of the COVID situation. So we're seeing very strong demand for base metals. So yeah, I think it's probably doing very similar to what I expected. But the lithium-ion battery story is a 2023 story, maybe even 2025. So we won't see the aggressive runs in nickel for a few years yet. We will see these short-term spikes, but from a I suppose fundamental perspective, yeah, it's a 2023 story. So we're not too worried about where the nickel price is today. We know that in 2023 it'll probably be higher than it is today, and that's all we need to worry about.
I think I agree with you. I think the fact that you're not a marginal project speaks volumes too. If you're a marginal project, then yes, that becomes a big factor. But if you're sort of in the middle or towards the top, you've got a lot of fat to waste. But look, Scott, thanks for giving time. I think it's really, I really like the fact that scoping studies out there. At least it set the pace, and people can actually see what's about, and they can criticise, which is good. It works both ways, right?
Yeah.
And until that point you can't move forward in some ways.
Yeah.
So look, thank you, Scott, and I hope we can have another chat down the road.
Right.
All right. Thanks.
Thank you.